You will never change your life until you change something you do daily. The secret of your success is found in your daily routine. John C. Maxwell. And my friends, 10 to 15 minutes a day, that is all we ask so you can learn how to read these stock charts. Great training for the subscribers today. Remember, subscribing is free. Go to chartingwealth.com. We never sell or spam that list. The training today, fundamental analysis is fine, but don't be a dumb buyer. What does that mean? That is all about fundamental analysis. You can use it all the time to know that you're buying good stocks or investing in ETFs that are properly run, that don't have fees too high, any number of things. All that is fine, but like anything, you can want to buy the nicest Porsche available, but do you want to go to the dealership that is not going to cut the price at all and pay top dollar for no reason when you could shop around and get it cheaper than the sticker price? Absolutely. That's what we do, which is technical analysis. We know the fundamental analysis of something. We want to own it. Then we look at the technical analysis and make sure we pay the right price. We don't buy it when it's going down. We wait until it hits the bottom and starts to move up. Then we jump into it. In other words, you buy smart. You sell smart. So again, that's what technical analysis is all about compared to fundamental analysis. That is what we teach here, technical, which is called charting. And we're going to jump into these charts right now. Thank you again for everyone purchasing the book. Autographed copies waiting for you. Follow the link in the show notes. Again, subscribe so you get all these daily trainings. Let's look at this candle on the S&P. It is not crossing over as it was earlier in the week. Down for the day, 0.93%. Let's see what happens. Now, mark your calendars to check out the charts tomorrow at 3:50 p.m. to see if there is a weekly vertical crossover on the S&P. Will there be one? Don't know. Want to see if there is, because of course that could give you a jumping in point if this volatility is not scaring you too bad. But again, I encourage you to do your practice trades. Learn them. You're only going to learn by doing. And a practice trade is not going to cost you anything. If you are fractional trading, and you know what I'm going to do, I'm going to put that fractional trading training at the end of today's video. You'll see it linked to that. I want you to understand what fractional trading is. That is many different stock sellers, different houses will sell you, will allow you, whether it's Charles Schwab or whether it's TD Ameritrade, many of them will allow you to buy what are called fractional shares. You look at the S&P right now, it closed the day at what? $310.82. Now, you don't want to necessarily spend that much money when you are simply trying to do a very small trade just to sort of get a feel for what's happening and maybe at the worst lose a few bucks. Well, fractional shares allows you to buy small portions. That is maybe $50, maybe $100, instead of going in and having to buy a full share. The nice thing about fractional practice trading is that, of course, if you buy $100, real easy to keep up with your percentages of how you're doing. Of course, it also reduces the amount of money that you might lose. But guess what it allows you to do? It allows you to real money trade with a lot lower risk, which means you get to understand how to enter a trade, how to, the difference between the bid and the ask, and how to enter, how to go ahead and enter your good till canceled sell order the minute that you are entered into the trade, so that you're able to follow things and understand the workings of the market a little better. So take that training. I'm going to put it at the end of today's video. I think you'll get a lot out of it. Now, as the week moves on, big green up candle on the S&P trying to cross over, hasn't done it yet. Derivative oscillator still negative. Go to the 2-day chart. That crossed over going up back on the 9th, but look at the high here. I'm going to move Look, we haven't reached anywhere near that high. We hit that, and of course we're rolling off of that red open box, which is again showing a slowdown in the up movement. Of course, this candle will finish drawing on Friday, just the first day into it, but the price percent oscillator's lost energy, derivative oscillator still going up. Look at the half-day chart. Getting close, it looks like, to crossing over going down. So again, some cautionary notes, even if there is a weekly vertical crossover. Watch, remember, all the charts all the time. Pay attention. Let's see what the market is telling us as we get into Friday. Now we leave the S&P 500, go into the tech stocks. The Nasdaq 100, green up candle, not as big as the prior one, reaching a higher high here lately. The last high was, 303.50. Where did we go this week? The high, 299.14. So not as high as we were before, but the biggest high we've seen here lately over the last few weeks. Look at that price percent oscillator still heading down a little bit, or it looks like it's a little less than flat. Derivative oscillator still negative, losing downward momentum. We had a 2-day crossover, same time as we had the S&P back on Monday the 9th. And then, of course, the next 2 days we had a red spinning top, lots of indecision tending down. And again, the average pace Heikin Ashi candlestick is showing us a green up candle. It was a down day, 0.47. We see the price percent oscillator barely pulling away from the red signal line. Derivative oscillator is green. So again, that's just the first day. We'll see how things go on Friday. And look at the half-day chart actually crossing over, going down at the end of the day. So again, we are negative on the weekly. It's not crossing. 2-day, barely holding its own. And we see the half-day crossing over, going down. What could you have happen? Well, if it's a big down day, we could end the week with a 2-day recross going down. Don't forget that. Might give you an opportunity to jump into a down move on the 2-day chart. So again, watch that. Pay attention. Those of you filling out your show notes, that is your daily market worksheet, encourage you to mark these things down when we talk about them. Make a note of them. Get ready to potentially do a practice trade there. Now we go to 20-year bonds up for the day, swinging back 1.70. It is a down week so far. Price percent oscillator still going down. Derivative oscillator losing some downward momentum. Look at that 2-day chart, still negative, but the price percent oscillator heading up. Derivative oscillator positive, gaining more momentum. We had 4 days of strong down movement, and the first day of this latest 2-day candle is a green up candle, wick on the bottom, long wick on the top, price still well below the 2-day trend line. Well, the top, we hit it with the wick on top. Also got close to the weekly. So again, still negative though, that weekly still negative. So we'll continue to watch, see what bonds are going to do. Look what happened on the half-day chart at the end of the day, up in the morning, further up in the afternoon, crossing over right at the end of the day. So you know what we're going to do? We're going to redraw our half-day trend line. Again, like to keep those going. Pay attention to them. Again, the nice thing about trend lines is they help you very quickly see what's happening with the weekly, the 2-day, and the half-day. It's, again, a good visual reference. That's where we are on bonds, still negative. Now we go to gold. Gold up 0.61%. Look at that price percent oscillator hiking over, going down. Derivative oscillators about flat. Red down candle for the week. And we'll continue to keep an eye on it. We go to the 2-day, and of course it's paralleling pretty much the red signal line. That is a green, that's a solid green candle, which means a slowdown in the down movement. We look at the, tell you what we're going to do here, is we're going to redraw our 2-day trend line. We will There we go. And again, we see price is below the 2-day, below the weekly, barely pulling away. It's the first day of the latest 2-day candle, barely pulling away from the red signal line. We will keep an eye on that. And we go to the half-day chart, and we see where things hammered down on Monday in the morning and in the afternoon on gold, then sort of popped up Tuesday and then back down on Wednesday, back up a little on Thursday, but that price percent oscillator still tracking down, derivative oscillator still negative. So gold is still trying to figure out when it's going to hit its bottom before it moves back up again. We'll just wait and see and be patient. Folks, that's where we are as we end the day. These are indeed interesting times. Market in the fall-winter trading zones, more like the summertime trading zone typically is, as markets are sort of bouncing around. Of course, much more volatility than we typically see, and not our typical fall-winter trading zone where we have nice, long moves in one direction or the other. But we live in a crazy world. People say we're no longer investors, we're speculators. But as long as these charts give us signals that we can follow, we will use them. That's what this is all about. Want to know more? Of course, buy the book. Patreon supporters, thank you so much for your support. If you want to be a Patreon member and get that 3-part Options Made Simple training, if you're interested in options, we have the supreme options training for you. We think it's the best, and it's free at any of our 3 levels of Patreon support. Check it out. Follow that link in the show notes. Also, print out your daily market worksheets, trade worksheets, and weekly market worksheets. Remember, at the close of the market on Friday, you'll fill out that weekly market worksheet. At least do that. And of course, trade worksheets every time you do a practice trade if you want to supercharge your training. That's where we are, folks, as we end the day and go into the last day of the week. God bless. All the best from the whole team here at Charting Wealth World Headquarters.